So what's the real state of the labor market ahead of tomorrow's big jobs report? Let's ask Evan Sohn. He is chairman of Recruiter.com. Evan, welcome. This is many more cross currents than normal here. I genuinely, what do you think the trend is?
Well, first of all, thanks for having me back. Sentiment is slightly up in the Recruiter Index. Last month, we hit an all-time low, and it went up to 2.9%. But when you double-click into it, it's really at the 90-day outlook where recruiters are seeing a little bit better world for themselves. It's a very tight labor market. 70-something percent, about 70% of the recruiters reported that their candidates they were interviewing were actually employed. So it's still this quit rate that we're looking at. And the JOLT report really aligns with the JOLT report, where we actually saw not just that the job opening numbers increased, but the actual quit rate of August increased from July slightly. It's about 3.5% increase, higher than where it was in the pre-pandemic levels. And by the way, if we're looking year over year at the quit rates, it's still about 15% higher, 50% lower quit rate last month of August than it was in August of 22. So it's a very, very tight labor market. We've also been doing some studies where we're seeing that the working population getting older. Again, another testament to the fact that this is a very, very tight labor market.
Yeah. So that doesn't really clear anything up for me, because I say, okay, well,
okay.
No, but meaning your clarification now leads me to bigger questions about the economy. So if the job market is still tight, but then I'm thinking about our segment top of the hour about how, looking around the corner, things might not look so good. I'm like, maybe that's why we're seeing so many labor strikes at the moment. What industries do you see that have the biggest strength right now?
So healthcare. Healthcare continues to be the #1 spot. And again, if you see the in-person roles that our recruiters are working on are about 43%, and in-person and healthcare are generally going to line up very, very closely with each other. Remote is actually now only 20%, full-on remote jobs. But medical, IT, sales, hospitality, retail, those are the top in demand. But you see they all tick down a little bit. The other thing that's really interesting is that the majority of the recruiters in the index saw salaries remain the same. Month over month, the same salary. And where we saw a little bit of an increase was actually on the higher end side, the 200,000 plus job, and on the lower end side, the $40,000 to $45,000 plus jobs. So it's a really interesting market, but again, very, very tight. The quit rate is still there, replacing jobs. We only saw a very small percentage of the recruiters actually working 100% on new jobs. So if you think of backfill jobs where people quit, they have to fill those jobs again, are still the primary jobs that people are working on.
Yeah.
And you see here now, compensation is still the #1 reason why people want to leave. So they want to leave for better compensation, but maybe the compensation isn't in there, which is why our candidate sentiment actually ticked down 1 notch month over month from 3.5 to 3.4.
And that jives with what we've heard, that, the wage hikes, or the anecdotally in some of the ISMs and other things, wage hikes are coming down a little bit. And it's interesting what you say about healthcare. I mean, we're experiencing the biggest healthcare strike we've ever had, and the tightness of what you're describing kind of suggests why they have so much bargaining power right now. What's on the flip side? Travel tourism, that looks a little bit weaker?
I think that's what we actually saw. And every retail ticked down a little bit. Architecture, engineering ticked down. Recruiting is actually flat month over month. And travel and tourism still at about 1% there. So something's going to have to make up for that overall difference.
Yeah, absolutely. Evan, a pleasure as always. Thank you so much, arming us with more data ahead of that big release. We really appreciate it.